Greetings everybody, Sive here with the ForexPeaceArmy.com. Let's take a look as usual on the Bitcoin market. So here is a few moments to discuss. First, starting from the long-term charts, I do not see actually big changes. So everything we already discussed here. So market at oversold and stands at the strong support area. So potentially this is a good background for a bounce. I'm not pretending on this just continuation of this rally or taking out of the top, but some technical bounce somewhere to the 50% pullback is really possible. So that actually coincides with the overall view on the weekly chart. We are considering possible hand shorters pattern and reaction up to 100, 105, maybe 110. It's quite reasonable in the current circumstances. The only question here is whether market will show first slightly deeper action and then starts to pull back, or pullback might start right from this consolidation. In the previous month, you can see a few candles, and as we talked about last week and the week before, it looks not as the preparation for upward reversal. It more looks like the consolidation before downside continuation, because very tight range, no significant volatility inside of it, despite a lot of data have been released, including the Fed, news about the quantitative easing. This made no impact on the performance, which tells that this, well, at least from a technical point of view, it looks more like the bearish performance. So, and from that standpoint of view, it's will make sense to suggest possible drop down to the neckline where market could retest these previous lows before action might start. But on lower time frames, we have a few tricky moments. Besides, do not forget that this week we will get the decision from the Bank of Japan on interest rates, and as many traders signed that the activity of the Bank of Japan very often makes impact on the performance of the Bitcoin. Since the rates difference will narrow between the United States dollar and Japan, that might make impact on the carry trade, and in particular on the Bitcoin, and the Bitcoin in a high degree. Why? Because volatility that stands on the market usually is backed and covered by the profit difference if you're applying the carry trade and investing in the United States dollar-denominated assets. And currently, since Bitcoin is the most volatile asset among all the others, the potential profit of the carry trade will narrow, just because the difference of the rates will narrow, because it's expected that bank will raise rate, and correspondingly that could make impact on the portfolio balances. So the amount of the Bitcoin in portfolios might be decreased, just because it will demand more assets, more potential profit to cover the volatility of the Bitcoin in the way of the margins, in the way of the protection in different way, and so on. So that's the logic that stands behind of this. We will get the statement on 19th on December, right? So it's time to think about it, but that's really a very important session for Bitcoin market. Will be just keep an eye on the decision on the Bank of Japan. Correspondingly, we have different patterns right now, contradictive patterns, and first coming on a daily chart. You can see that here our suggestion was correct, that it's better to not consider any longs that we discussed last Thursday. Indeed, market dropped down. Now it stands at the support here, and is also support of the wage pattern. Divergence that we mentioned mostly is done, just because here is market create the new lows. So it's minimum target of the divergence, so I do not need this anymore. And take a look now, it's grabbers are forming here. To speak honestly, guys, if we wouldn't have these grabbers, I wouldn't consider taking long position, because market really looks heavy, especially in the way how it was trying to break this 94 area. It definitely was a problem for the market, despite all easings from the Fed, rate cut, and so on. Even liquidity have been provided, start coming on the market. It's not enough. And these grabbers, I would call these patterns, well, of course we should not ignore it, and actually we could try to use it, but honestly speaking, this will be kind of the wild card trade. So kind of the pain or gain situation. Attractiveness of these patterns mostly stands with the potential risk. It's very small. So all that you need to do to use these patterns is to place stop below them. If you will win and market indeed will keep going higher, that will be very superb trade. So you will get a great result in terms of the risk reward, and probably if market start accelerating and taking out 94. It's just because this minimum target of the grabbers. It should reach the 94 and complete the ABCD pattern that we were talking around 96.40, right? The problem is with the reliability of this pattern. So if it is acceptable to you in general to take this risk with a possible placing stop below the grabbers, there's no problems trying to use these patterns. Because from the cash point of view, the risk will be not really big because market stands very close to the lows. If you are not sure, you would like to get more confirmations, then probably you will have to wait. In particular speaking, if you take a look at the 4-time frame chart, and here is actually same wedge pattern, and here we have this ABCD pattern that we talked previously. So just to remind you where the OP target stands with this upside action. It's around 96.40. Right, 96.44. It's right here. That's potential pattern. On the hourly chart, you could wait for some more confirmation. As we expected, ABCD pattern here has been completed. OP, market stands in agreement. 87, 88, almost 88. OP target is done, so our target that we mentioned on Thursday now is completed. What particular patterns you could wait? Since the OP already is completed, the market should start preparation for a possible reversal and reaction with the grabbers. Most common pattern that I could mention here is probably kind of the hand and shoulders. So it might be something like this. So if market will start moving higher, let's take this one. Okay, so this might be shorter, kind of in the head. Market will reach the zero around 19.50, show some retracement. Probably it will could be completed because until the Bank of Japan meeting we'll have a lot of time. So probably to our next discussion on Thursday we will get some results. That's actually what you could wait for. If somehow until the until the Bank of Japan meetings everything will collapse and will be broken, market keep going live with a breakout of the wedge pattern, that will be the signal that we are going back to the 78, 79 area. So decide by yourself whether you would like to wait it or not, or you could deal directly with the grabbers on a daily chart. For using the grabbers, you could use just minor swing here because this actually is the grabber, and try and take position on some minor retracement. It's very small difference, so I will not even speak about it, so you could decide by yourself. Maybe you will buy right on the market if you would like to. That and towards what we have. So two conclusions. First, we have the bullish patterns that potentially might be used, although they do not have corresponding background. So they may work, maybe not, because mostly currently it will depend on reaction in the Bank of Japan meeting. That it brings some uncertainty, but attractiveness of this setup is that it has potentially a very small potential loss, and that makes it attractive. These two objects that you need to think about and make a decision on the position taking.